In this podcast episode, Andrei Jikh, a personal finance influencer and investor, joined the Iced Coffee Hour to discuss a broad spectrum of economic, investment, and life topics. The dialogue traversed from the nuances of Bitcoin and crypto investing to personal reflections on happiness and success. A significant portion of the discussion centered around Bitcoin's evolving role and the ideological battles shaping its future. Andrei explained that in both 2017 and 2025, there have been factions within the Bitcoin community warring over its fundamental purpose, whether Bitcoin is primarily money, a currency for peer-to-peer payment, or a store of value akin to digital gold. This war for the soul of Bitcoin hinges on debates such as block size and network feature upgrades. For instance, the 2017 block wars revolved around whether to increase Bitcoin's block size to support more transactions, a change favored by those seeing Bitcoin as money. Opponents, fearing centralization, resisted, resulting in Bitcoin remaining with its 1 megabyte block size. Moving into 2025, a new debate focuses on whether Bitcoin should limit the storage of data within transactions or embrace functionalities that could integrate images, videos, or NFTs on the blockchain. Andrei cautioned that expanding Bitcoin's use as a store of all kinds of information risks bloating the network and opening regulatory challenges. Supporters think these upgrades could enhance programmability and broaden Bitcoin's utility. However, many investors, including Michael Saylor, prefer Bitcoin to maintain its pure economic data function, thereby preserving decentralization and its value proposition. Addressing concerns about price manipulation in Bitcoin, Andrei acknowledged that the cryptocurrency's dramatic and sudden price swings might indicate manipulative activity. He discussed the concept of rehypothecation, where collateral, in this case, Bitcoin used as loan security, is repeatedly lent against and recycled across multiple parties, which can artificially suppress Bitcoin's market price. This layered collateralization can lead to several entities claiming ownership of the same Bitcoin, distorting supply signals and causing instability. Andrei emphasized that self-custody of Bitcoin is a critical way for investors to avoid exposure to rehypothecation risks. Keeping assets in cold storage with secure hardware wallets and advanced seed phrase strategies such as plausible deniability wallets puts control fully in the investor's hands, preventing others from leveraging those coins without consent. He warned that price corrections could be violent once this systemic opacity clears, potentially benefiting those who hold the real Bitcoin rather than derivatives or looped collateral. When asked about the best investing advice he's encountered, Andrei underscored the importance of delayed gratification. Wealth building, for him, is less about chasing the quickest returns or constantly enlarging one's portfolio, and more about anticipating what will happen in the future and patiently positioning oneself accordingly. He thinks that the ability to delay impulsive spending enables a more peaceful and focused approach to financial freedom. He also reflected on the emotional circuit of buying things. The actual happiness often comes not from owning the item, but from resolving the desire for it. Those able to accept not wanting something can experience happiness similar to having it. This mindset helps avoid unnecessary purchases and keeps one's focus on meaningful financial goals, demonstrating a maturity that transcends consumer impulses. Andrei expressed a cautiously optimistic view about the U.S. economy from an investment standpoint, even as he acknowledged quality of life challenges. He believes the United States will remain the dominant world reserve currency for the foreseeable future, primarily due to factors like military strength and historical centrality in global finance. Although the U.S. dollar has experienced notable depreciation, down roughly 10% in purchasing power year to date, Andrei pointed out that asset inflation is partly a consequence of this monetary phenomenon. He further anticipated a huge wealth transfer in coming weeks, reflecting systemic shifts from older generations' assets into younger hands or between classes. Despite inflationary pressures, he emphasized the continued strength of U.S. stock markets and the advantages gained by forced participation. People must invest to preserve purchasing power, indirectly supporting asset prices. Still, Andrei noted that living standards in countries like Switzerland and Japan currently surpass those in the U.S., and he predicted a future where many retirees live abroad for better quality of life on a moderate budget. Andrei shared his personal allocation to Bitcoin, approximately 30 to 35% of his net worth, while balancing the rest in real estate, cash, and stocks. His approach is conservative relative to many crypto-focused investors, but aligns with prudent risk management principles. He stressed the importance of making asymmetric bets where the potential upside justifies the risk, such as investing amounts that one could afford to lose completely without severe consequences. He reflected on the psychological pitfalls faced by retail investors, such as greed-fueled overconfidence in moonshot projects like XRP, aiming for unrealistic returns, leading to poor allocation decisions. Instead, he advocates sizing investments such that a mega return would result from small actual capital while protecting the core portfolio. This philosophy dovetails with his view that the crypto ecosystem's mature bets remain concentrated in Bitcoin and Ethereum, where adoption and infrastructure are more solid. The conversation took a turn toward alternative assets like Pokémon cards, luxury watches, and non-fungible tokens, NFTs. Andrei holds a substantial collection of rare Pokémon cards, estimating their value in the hundreds of thousands of dollars, but acknowledged the niche and illiquid nature of such assets. The rarity and nostalgia factor play crucial roles in valuation, but the market is small and often opaque, with sales typically occurring off-market. In watches, Andrei described acquiring iconic yet scarce models, such as platinum chronographs in Japan, where cultural preferences keep prices reasonable and conditions pristine. Japan's unique market dynamics, including its disdain for counterfeit goods and cultural superstitions about secondhand items, create exceptional opportunities for knowledgeable buyers. Regarding NFTs, Andrei admitted the initial craze was largely a stimulus-fueled speculative bubble, but he foresaw utility-driven resurgence. Future NFTs might represent ticketing, event access, or real estate digitization rather than mere collectible artwork. While acknowledging the steep declines in CryptoPunks and Bored Apes' values, he views these now as nostalgia plays that could gain long-term cultural significance. Andrei expanded on the crucial aspect of Bitcoin ownership being control. Self-custody, using hardware wallets such as Ledger or Trezor, ensures an investor holds the private keys without relying on third-party custodians vulnerable to hacks, collapses, or rehypothecation. He recommended using advanced seed phrase setups, like 25th word passphrases, that enable plausible deniability by producing decoy wallets under duress. This security strategy is vital given recent high-profile attacks on crypto holders. While cold storage is not immune to physical coercion, the so-called $5 wrench attack, it offers the highest independence from systemic risk. Andrei explained that cryptocurrency ETFs, while convenient, come with premium spreads and potential collateral risks, making self-custody preferable for serious long-term holders, despite complexity. Reflecting on Bitcoin's value drivers, Andrei highlighted its fixed 21 million coin supply versus gold's variable quantity, which can be increased through new discoveries or lab synthesis. He pointed out that inflationary fiat money drives asset price inflation, rewarding holders of scarce assets like Bitcoin or gold. Andrei aligned with Jeff Booth's philosophy that the natural state of the economy is deflationary. Technology and efficiency should cause price drops over time if the money supply is fixed. However, government's ability to print money artificially inflates prices and erodes purchasing power. Bitcoin, with its fixed supply, offers an unprecedented hedge against such inflation. He predicted slow but steady long-term appreciation towards price points that reflect its unique scarcity and adoption, potentially reaching $1 million per coin over the next decade or so. Branching into personal well-being, Andrei shared a revelatory experience undergoing an extensive health diagnostic at a premier hospital in Bangkok, Thailand, which costs significantly less than comparable U.S. procedures. He and co-host Graham discussed U.S. healthcare's focus on symptomatic treatment and its barriers to proactive diagnostics due to insurance constraints. The conversation further explored America's paradox of higher healthcare spending, yet comparatively lower life expectancy and poorer health outcomes relative to countries like Switzerland. Andrei criticized overprocessed and sugar-laden American diets, the the fragmented insurance system, and the influence of legal and financial hurdles that inflate costs and limit early intervention. The episode highlighted the growing appeal of medical tourism for comprehensive health assessments and preventative care. The speakers reflected on systemic forces that keep many people financially constrained, deeply entrenched in traditional models of work, consumption, and debt. They proposed that outdated educational and social systems were originally designed to produce compliant labor rather than financially independent individuals. Andrei discussed how student loans, mortgage debt, and consumer expectations form a hamster wheel trap inhibiting entrepreneurship and financial freedom. They debated conspiracy-like motives behind money printing, but concluded that excessive government spending and political mismanagement are the real causes. The wider social narrative encourages continuing consumption and incremental lifestyle improvements, keeping most people near subsistence while constantly chasing raises and new debts. Successful wealth building, they emphasized, stems from breaking this cycle through education, discipline, and deliberate lifestyle choices. Andrei shared his evolving definition of success from purely financial wealth to valuing family, health, and life experiences. He valued happiness as the difference between expectations and reality, advocating a balanced pursuit that avoids attachment solely to material goals. Despite his sizable wealth, Andrei expressed contentment with a simple life, enjoying friends, sports like pickleball, and meaningful interactions over expensive possessions or status symbols. The discussion touched on minimalism and the psychological dynamics of edging oneself with incremental upgrades, such as postponing car purchases or luxury items not for necessity but for the happiness boost associated with desire. They discussed the infinite hamster wheel of wants among the wealthy, but stressed the importance of finding fulfillment beyond monetary accumulation, supporting a holistic view of wealth as encompassing mental and emotional well-being.